High inflation, rising interest rates, and geopolitical crises are causing a reset of global real asset markets. With strengthening headwinds, institutional investors are adopting a wait-and-see approach to expanding their portfolios, yet optimism remains about the attractive long-term investment opportunities in the sector. Patrizia's 2023 client survey reflects this market sentiment. Capturing the views and opinions of more than 120 of Patrizia's global institutional investors, the survey offers key insights into how the real estate and infrastructure sectors will develop as we enter a new cycle. Despite the global economic uncertainty, over half of institutional investors intend to keep their real estate allocations unchanged over the next 5 years, while 60% plan to increase their share of infrastructure in that same period. This indicates the long-term picture for real assets looks attractive. So what other major trends were revealed in this year's survey? Number 1. Institutional investors are increasingly focused on value creation in real estate through decarbonization and ESG initiatives. This shift to driving value through smart asset management is underlined by 3 key expectations from investors. Firstly, 85% expect an increase in brown to green development over the next 12 months. Secondly, 2/3 anticipate greater capital expenditure and refurbishment program in that same period. And thirdly, value-add, opportunistic, and debt strategies are expected to attract the most investment over the next 5 years. With only 17% of institutional investors planning to increase their real estate allocations over the medium term, this need to focus on the asset has never been more important. However, many bright spots remain across the market. Logistics and residential remain top of the wish list for those planning to expand their allocations. The second key trend: institutional investors are continuing to expand their infrastructure allocations with the energy transition driving growth. With 60% of investors planning to increase their infrastructure portfolios over the next 5 years, there is strong conviction for investments addressing the global megatrends. Climate change and the transition to green energy will accelerate the growth of portfolios. Of those surveyed, 56% expect to increase the share of renewables in their infrastructure portfolio over the medium term, and 45% plan to grow the share of alternative energy solutions, such as biogas and hydrogen. There is also positive sentiment towards digital infrastructure, such as fiber and telecommunications, and social infrastructure. When it comes to market developments, institutional investors look at infrastructure with cautious optimism. Lower mid-market investments under €250 million are expected to be the most likely to outperform the broader infrastructure market over the next 5 years. Third key trend: investors continue to integrate ESG throughout the investment process. When looking at investors' views towards environmental, social, and governance initiatives, the survey shows a continuing upward trend on the importance of ESG in their decision-making. Nearly 9 out of 10 investors capture and use the ESG data of their investments, while 70% say ESG criteria are an important part of their investment process.
And more than half now evaluate the impact of their investments alongside risk and return in their decision-making.
However, the main focus for institutional investors continues to be on measuring their climate impact. 82% intend to track the energy consumption of their real estate investments over the next 5 years. This year's survey underlines just how committed institutional investors are to sustainability and the decarbonization of the built environment. But despite the global uncertainty, the outlook is clear. As we enter a new cycle, future-proofing portfolios through hands-on asset management and strategic, high-conviction investing will continue to drive long-term value in real assets.